What's up, Visionaries? Welcome back to another episode of Visionaries Unplugged. I am your host, Caleb Sam, and today I want to talk about someone who really inspired me in trading. This is going to be a fun episode. You're going to listen to his stories. I wish you could have access to this book. And after this episode, if you can go get a copy, if you can buy it online, please do whatever it takes to get a copy of this book. Now, the book I'm going to talk about today is called Reminiscence of a Stock Operator, about the story of a character known as Jesse Livermore, who lived back in the late 1800s and early 1900s. Okay, so I'm going to tell you about his story, how it inspired me, and how it got us that drive into trading and how it inspired us. Okay, now first of all, I'll first start by giving a few quotes from successful traders who've gone through his book and have become successful from it. We all know PTJ, Paul Tudor Jones. And if you don't know these people, please take the time. If you're a trader, if you're someone who's very interested in the markets, make sure to look for these people. Learn from them, listen to what they say, because they're the ones who shaped this industry for us. Now it's just us following in their footsteps. So PTJ, the billionaire hedge fund manager, he said his impact. Paul Tudor Jones has often referenced Jesse Livermore's story as a foundational influence on his trading discipline. The lesson he took from him was always have a proper risk management and stay humble even after major wins. We've all gone through this process. We know how important risk management is and how important it is to stay humble. Not what you see online, what you see people flaunting up here. Stay humble, because the markets will humble you if you do not humble yourself. One of the quotes that he took from the story: the secret to success is trading. The secret to success in trading is to play great defense, not offense. Another very successful trader called Ed Seykota, trend-following trading legend. Seykota listed Reminiscence as one of the most important books that shaped his career. I personally will refer to Reminiscence of a Stock Operator all my life. Okay, it's one of the most important foundational books for a trader. The lesson that Ed Seykota took from this was the psychological battle within trading. Learning that controlling your emotions is more vital than market predictions. We've all gone through that. And I'll repeat that again. Learning that controlling your emotions is more vital than market predictions. Another trader that I really love, and if you don't know him, you can follow him on Twitter or Instagram. His name is Steve Barnes. Please follow him. He has daily quotes where he shares different stuff about traders, what traders go through. His pages are just trading content, okay? His impact was, Barnes frequently cites Livermore and his writings, especially on Twitter, okay? And the lesson that he took is that the danger of ego, revenge trading, and trading without a clear plan, all central to Jesse Livermore's rise and fall.
When our engine stops, our drive continues. A new opportunity, driven to be better than before. We go again, as we prepare for another race. This way of life is not for everyone, but I would not trade it for the world.
And I'm going to show you all these stories about Jesse Livermore's rise and fall. And last but not least, another trader who turned about 20,000, I think even less. I think it was about $2,500 to $200 million. The father of turtle traders, Richard Dennis, one of my favorite. And Richard Dennis and Ed Seykota, also PTJ. I'm not sure about PTJ, but Ed Seykota, I think PTJ is also one of them. If you want to read their stories well, go and read the interviews done by what's his name in the Market Wizards, Jack Schwager. Yeah, Jack Schwager. I'll come and talk about that in a different episode. But Jack Schwager's stories or interviews of those traders is one of a kind. Make sure to listen to those ones. So Richard Dennis has not directly quoted, but his trend following system echoes Livermore's approach. And you're going to see that, and I'll show you in a different video, but I'll also talk about it here. My strategy and how I've tailor-made it, especially right now, how I've updated it, is very much trend following. And Jesse Livermore stresses on following the trend, and we're going to talk about that. What Richard Dennis says, the lesson he learned: you don't need to be right often. You just need to be right big when it matters. That is one of Jesse Livermore's hallmark. Okay, so just to give you a brief about Jesse Livermore and who he is before I get into his story. He started trading. His first ever trade, he made about $3. Most of you have gone down this road because that's where we start. He made a lot of money during the 1907 panic, which was known as the Great Bear Strike. Okay, he made about $3 million in profits, and that is back then. Okay, he was a tropical trading short. He used to like trading short. Another nickname, and you've heard us talk about this when we used to call Ken this name because he sort of tried following in the footsteps of Jesse Livermore in regards to that, is Boy Plunger. He was known as the Boy Plunger, the one who will go heavy, and be right on shorting the market. He was a big commodities trader. You're going to see, I'll talk about this. He used to trade cotton, gold, and all that. Wheat as well. There's a trade that he traded and missed even about $8 million and all that. So let me get straight into the story of Jesse Livermore. But before that, I can show you. This is a part of my notes that I took from Jesse Livermore. This is the original cover of his book. Okay, so this is how it looks, reminiscence of a stock operator. Whenever I read books, I always tend to write down my summary in my laptop. Okay, long term I used to write summary in my book, but the disadvantage of book, well, it's tiring. You can't write a whole summary of a book. You can, but it'll take a lot of time. Another disadvantage is that the book can get lost and all that. So if you look at, these are all my histories, or rather lessons, not histories, sorry. Lessons that I've learned from the book of Jesse Livermore. You can see all this, and it goes down. I can scroll forever. This was one of the books that I really sat down to make sure that I get everything. Read it once, read it twice. They say when you read a book twice, it's not that you didn't read something before, it's that you're not the same person that you were when you're reading that book before. And that's why we see new things when you're reading the same book a second time. So you can see all those notes, okay? So I'm just going to give you a breakdown of this. And the people who have access to this is our students, which we've updated our course in our platform, in the private platform. So you have access to this. If you don't read the whole book, you have access to my short notes, because I normally write my notes, put some comments, lessons that I've learned, how I use it, and all that. So without further ado, let's get straight into the story of Jesse Livermore. And I'll be reading from quoting from my notes that I have here. Okay. So Jesse Livermore started young, my friends. At just 14 years old. How old are you now? When did you start trading? I personally started trading. I knew about the Forex market when I was 19, 20, thereabout. Now, luckily, in this age and time, there's online, internet, and presence where you can learn from. Online schools, what you normally call the University of YouTube, University of Internet. And we could learn. Now imagine this guy learning about trading back then when he was just 14 years old. At just 14 years old, he was a quotation board guy. So a quotation board guy, if I give you that story, is basically, and let me look for a photo. Okay, quotation board trading. Okay. Let me show you a photo. What these guys used to do back then, they're the ones who used to write on the boards. Now, before, there were no charts. Okay? Sorry, guys, I'm not getting the actual images. So basically, what a quotation boy or a quotation person does, back then, they used to have a chartboard, like what's behind me. And then when the market was moving up and down, they were signaled and told that the price of, let's say, Tesla stock has gone to 250. So they rub the board, they write 250. Maybe 15 minutes past, the stock has gone up to 260, for example. They rub and write 260. So those are what we are calling the quotation board boy. Okay, writing down the price changes from every ticker. So if you go online, you can check those images. But here's where it gets more interesting. While other kids who are goofing off, having fun, playing in the fields, playing kati, skipping rope, all those things. These days, young people play a lot of PlayStation. Jesse was clocking price actions like it was the Matrix. You know, those numbers that you see, those are what he was doing at just 14 years old. A quotation from the book. Another lesson I learned early is that there was nothing new on Wall Street. There can't be, because speculation is as old as the hills. So Jesse realized something traders still struggling to internalize. Price patterns repeat. And imagine, my friends, that was back then in the late 1800s. He noticed at a young age that price patterns tend to repeat, because he used to write that thing a lot of times. He used writing and writing and writing. So you could see certain patterns, certain things repeating themselves. He kept a little notebook, tracking what stocks did before big moves. He was building what we'd know today as data-driven edge without even realizing it. Look, guys, you have no option as a trader. You need to keep a journal, you need to keep track, you need to have data. And we've talked about this many times. We've stressed it with Ken here. Data, data, data. By the time we realized that we need data in order to trade profitably, we had already traded for about 4 years. So I'm here to tell you, start soon. Have a track record. It's just like having a business. You cannot have a business without having a track record. Or record keeping track of how your business is doing, the ups and downs and all that. Okay? And there's a quote here that I wrote from Jesse Livermore on that, since we're on that topic. The importance of having a trading plan. I didn't, and this is later on, okay? So I'm just skipping a bit. I didn't always win. My plan of trading was sound enough and won often than it lost. If I had stuck to it, I'd have been right perhaps as often as 7 out of 10 times, which is a 70% success rate. In fact, I always made money when I was sure I was right before I began. You can only be sure you're right before you begin if you have a trading plan, if you have a journal, because you've seen this thing happening over and over again. What beat me was not having brains enough to stick to my own game. That is, to play the market when I was satisfied that the precedents favored my play. Okay? So that's just a quote later on in the book. So that's how basically started at a young age. A fun fact, he made $3.12 when he started trading, an equivalent to your first green trade when you start trading. Most of us, that's what I was making back then when I started trading. You see, $3, $2, $10. That time you have a very small account. If you have a $100 account and you see a $10 profit, that's 10%. But that was back then. Okay, so something you should take away from this, guys: the best traders are pattern recognizer. Find a way to recognize patterns in anything. Pattern recognition does not necessarily mean that you're only trading technicals. There are people who trade fundamentals. They also connect the dots. They're just patterns. You're trying to solve a puzzle. There are people who trade sentimental trading. There are people who do something new. You can check it out. And I'm a big fan of these people who trade this strategy because I use it in another market that I normally trade. It's called social arbitrage. You can go check out some people called Damn Money. Okay? Damn Money. They're on YouTube. Check out them socials or their channel. What social arbitrage basically does, they look at trends and what is happening on social media and try to find those stocks that are trending early enough and they buy on those ones. They don't care about the price, they don't care about fundamentals. They look for what is really trending. But that is social arbitrage, a story for another day. Hey guys, so I have some exciting news. Part of our partnership with Paperstone allows you guys to get our courses at 50% off. It is important to know that all of our courses have gone online, but at the same time, some of you have really been requesting for us to continue doing our one-on-one courses. Now, this will still be there, but we've changed our format. So once you pay 25,000, now it's away from 50,000 down to 25,000, you get access to our online module course, which will do the same process we've been doing physically, but it will be all online. Now you get access to our course and only 10 students will be enrolled at any one time, and this will be happening all throughout the year. The other 25,000 that you were supposed to pay for the course, Paperstone has allowed you to deposit in their own accounts. You open an account with Paperstone and the link is below. Deposit your money and start trading with Paperstone. So that money that you put there is what we're going to teach you how to trade it and how to grow it gradually. And this is your own money, so you pay to earn. Okay, you've put your own money in your own account. We don't take it, it's in your own account. You can trade, withdraw, and make profit out of it. So enroll today. Join the link below to be one of the people who will be among the first people to start. We only taking 10 people per group, so once the group is full, then we start the course until the next time. So those are little updates we've done here at Financial Hub. Everything is online, and join the movement and take your trading to the next level. See you soon. The bucket shop slayer. Now, if you're not familiar with bucket shops, think of them as today's prop firms, more or less, but a little bit more sketchier. You are basically betting against the house. And if you look in real terms, and we talked about this in a previous podcast, when you're trading prop firms, you're basically trading against the house, because you're always trading demo account, even if you're live. So for those who do not know, we did a video on this. The prop firms is demo account, basically. But still, at the end of the day, if you're a good trader, most good prop firms always promise to pay you at the end of the day, even if you're trading against the house. Okay? So Jesse Livermore started slaughtering bucket shops using his tape reading skills at a young age. Now, if I give you a little story about the bucket shops, and just let's dive deep in how bucket shops work. You basically gave your money to a clerk and told them what you wished to buy and sell. So you went to a teller. There's a clerk at the back of there, and you give them some money, and you tell them what you wish to buy. He looked at the tape or quotation board and took the price from there. The last one, of course. He also put down the time for the ticket so that it almost read like a regular broker's report. That is, that they had bought and sold for you so many shares of such a stock at such a price at such a time on such a day, and how much money they received from you. So it's basically what we still get right now. It's just that we get it digitally. When you execute a trade, for most retail traders, when you execute it, you normally see it does that sound, boom. Okay, then it writes a number there. It's like a receipt number. If you go and find those receipt numbers on your broker's report, what they send for you at the end of the month, if you're trading a live account using the local brokers, and the local broker, as we tell you to go for, is Pepperstone, they send you your quotation at the end of the month of how you've been trading, sort of like a report. So it has all that. Okay, when you wished to close your trade, you went back to the clerk. The same or another, it depended on the shop, and you told him or her. He took the last price of the stock that had not been, if the stock had not been active, he waited for the next quotation that came out of the tape. He wrote that price and the time on your ticket, okayed it, there's that stamp, the big stamp that okayed it, and gave it back to you. And then you went to the cashier and got whatever cash it called for. Of course, when the market went against you, the price went beyond your limit set by your margin. Your trade automatically closed itself, and your ticket became one more scrap of paper. So that's basically how bucket shop works. You're basically going to someone, they have the quotations, and you're betting against the house. If you make money, you take from their own pockets. If you lose money, okay, they're the ones who profit from you. The bucket shops wouldn't deduct both buying and selling commissions. And if you bought the stock at 20 now, over here it gets a bit complicated, so I won't get deeply into that. But that's how bucket shops worked. Now, Jesse Livermore was so good at bucket shops that later on, he had to go undercover because they banned him from being too profitable. We've seen this, look, Jesse Livermore said it himself. There's nothing new under the sun. There's nothing new under the sun. The markets are as old as the hills. Same thing you see today with prop firms. When you're trading prop firms too successfully, you get to see some prop firms get to ban you. They say your strategy is too much risky. We don't like your trading style and all that. Okay, because you're trading against the house. The prop firms today are just modern day bucket shops. Jesse Livermore had to say, I had to use my name, and sometimes even lose on purpose. Like literally, this guy will lose on purpose just so that they don't ban him from trading, because that was the only option. It's like right now, you're only trading prop firms and they're all banning you. So you had to find a way to rig the game so that they don't ban you, because it's your main source of income. Okay? Now, the first four and what started tracking Jesse Livermore down. This was, well, yes, he was really good at pattern recognition, but there's a quote that I really like, and it normally says, the seeds that you planted on your way up are the same seeds that are going to bring you down if you don't do it right. Okay, so when Jesse Livermore was being banned and told not to do this and that, and he started becoming good at it because he was really good and that's why he was being banned, Jesse Livermore had to move to New York City. He realized the real markets weren't like bucket shops. Remember, bucket shop was just a facade, it was a face, it wasn't the real market. You weren't getting into the real market. It's right now, I come and tell you, okay, it's more like a derivatives market. I tell you, this is the stock market. You buy it. If you make money, I'll give you money. If you lose money, I'll keep the money. So that's what bucket shops were. But now he went to New York City and found that this was different. It's like now you go to the New York Stock Exchange, the pit floor. Okay? No instant fills, slippages, delays, bigger emotions. Okay? This is where Jesse Livermore blew up because he found it very hard. Okay? Because now at this new market, he wanted to trade all the time. And this is when he came with this very important quote that we like sharing with Ken and laughing around with. There is the plain fool who does the wrong things at the wrong time, and the Wall Street fool who thinks he must trade all the time. I'll do this in a different video and you're going to see it quite soon. Maybe it's already been posted, so you should check it out on our YouTube page, where I've really changed my strategy in that I'm looking for very minimal trades, but very highly accurate. I'm not looking for perfection, don't get me wrong, but I've really toned down. There are more important things you can be doing with your time. Backtesting, journaling, getting data, reading books, rather than trading. Trading should be the last thing you should do after you've done all those other things that I've talked about. And these days, it's really toned down my system. Like this past month, only 3 trades. In the last 3 months, I've only gotten 3 perfect trades. Imagine, just 3 perfect trades. So this is what Jesse Livermore says. There's a Wall Street fool who thinks he must trade all the time. Jesse Livermore also was doing that, and he started losing, not because his strategy was wrong, but because the environment changed and he didn't adapt. So something you guys should take from Jesse Livermore is that you must learn to adapt to the new markets. But he got a comeback and he got a killing shot. After going broke, after making good amount of money, he went broke. He lost it all on the New York trading desk. Jesse Livermore went to St. Louis to rebuild in the bucket shops. Remember, the bucket shops don't want him. So he has to go as a disguise. Okay? He has to come up with a new name. He has to do things. There's a time even, you'll see later in the story, he used to have to send someone to go and execute the trades for him. Like he was outside, he could follow. He was getting the information. And then send this person, go buy this stock, sell this stock, buy this stock, sell this stock. And these people will go that and he will pay them a certain commission. But they started recognizing him because his name had already revolved around, it was sort of like an internet of, remember, internet is just a connection of computers. So this is like an internet of, what is it called? Bucket shops, where people are connected and they could say, there's this guy, this is how he trades, watch out for him. He's going to take your money. He could take your company broke. And he will send these people. And there's a time he was actually caught. One of them was the people who are looking, the risk managers or something in the bucket shops will recognize and say, this system, we've seen it before. And immediately they noticed that the person who was being sent by Jesse Livermore was also banned from going there. So it was just a repeat, same old. Okay, so he went back to St. Louis to rebuild from the bucket shops, and in a short amount of time, he tripled his accounts in days, not weeks, in days, but was banned again. That's when he realized his real edge wasn't rapid fire scalping, it was his patience. He even said it in a quote, "It never was my thinking that made the big money for me. It was always in my sitting." Now that I've mentioned that I only have good 3 perfect trades this last 3 months, some of you might be like, oh, Caleb, you're a bad trader. Your system doesn't find trades, your system and all that. Look, trading all comes down to you, the person. There's some people who trade daily and they're trading good. There are people who trade weekly, they're trading good. There are people monthly, quarterly, and yearly. But they all, at the end of the year, can sit down and show what returns they had at the end of the year. So he started trading based on big trend moves, and that's something that I learned from him. And I'll show you this later on when he was talking about the stock markets, waiting for confirmation before acting. An approach that he used to use. Let me look for that place where he used to trade commodities, when he used to trade a lot of cotton. There's an example here. Jesse Livermore bought 120,000 bales of cotton in July. It was a July cotton's futures market, while everyone else was shorting. His buy drove prices up 40 to 50 points a day because he used to go big. Okay. In one day, he triggered a short squeeze by submitting 4 simultaneous orders of 5,000 bales each at the close. The result was a massive short covering rally that netted him huge profits. And he quoted, "It was up to me to find out. I sent 4 different orders that ran up the price up 30 points, and the shorts were doing their best to wriggle away." Now, there's another place he was also trading and made about $3 million. Okay, here, found it. Jesse Livermore famously shorted the market during the 1907, and this is the story I'm coming to next. After recognizing a structural weakness. Now, remember, back in 1907, guys, there's no laptops. This guy could notice a structural weakness, market structure, in the financial system and a mounting sense of public fear. So he was using both his visual way of technical analysis and sentimental analysis, the fear among public people, sort of social arbitrage. And the result, he made $3 million in profits. He followed the line of least resistance. This is basically to say he followed the trend. And I've used this many times. It's like an example, and I learned this from Jesse Livermore. The line of least resistance is the path which market is going with least resistance. So, for example, let's say the market is in an uptrend. And I'll use gold as an example, quoted from the book of Jesse Livermore. He had this saying. He used to say, if the market breaks above or below the 100th or 1,000th point, let's say, for example, right now gold is at $23,000 at the time of my podcast writing. So if the market went above 3,100, okay, it will go up 150 to 250 points before getting a correction. Okay, so if it broke that level and closed above, it was an entry signal for him to take the market up from 3,100 to 3,115 or 3,125, the next key level. Or if it broke below 3,100, he will take it down to 3,085 or 3,075. Okay, hope you get that math. And that's the line of least resistance. Selling into weakness and covering into panic. A man does not have to marry one side of the market till death do them part. True. When the markets change, when the informations change, you change. Peter L. Brandt, one of my favorite traders, said, strong opinions weakly held. When you take a trade, be strongly opinionated and trust in that trade. But when opinions change and when information comes in and the markets change, then weakly held. Drop that position, switch or stay out of the market. Do not be emotionally attached to a bull or a bear position. If right now you have a trade that is running and you're just attached, you've been trading gold, you want gold, because gold has had a very good rally with the market tensions, the tariffs, new presidents, everything that's happening around the world. There's been a lot of panic, so people have been buying gold. So some of you have just been holding gold. Look, my friends, do not marry that market forever. Sooner or later, what goes up must come down. Trade the trend and let price action guide your stance. So as we continue back on the story of the 1907, which I've just talked about, which was the crash that he made, the $100 million short. $100 million was equivalent to 1.5 billion in today's market price. So this guy, in this trade alone, the crash of 1929, he made $1.5 billion and something that really reshaped the industry of finance. The scene is October 1929. Markets are euphoric. Everyone is buying. And we've seen this happening in cryptocurrencies. And Jesse is quietly going short. When the crash finally hit, the markets fell very strongly And in the modern day, he made an equivalent to $1.5 billion. And he said, the big money is not in the individual fluctuations. It's in the main movement. The main actual move is where you make money. And that's why, personally, and no attack to day traders, I really don't understand how they make money. The big money is in the main movement, not the daily fluctuations. Okay? But guess what? Despite this massive win, Jesse Livermore's personal life was unraveling. He was having depression, marriage problems, addiction to what? To risk. Big risk. He will go broke again and eventually make his money back. Go broke again, made his money back. He eventually lost the $1.5 billion, couldn't control his emotions, and eventually he took his own life in 1940. And that is basically the story of Jesse Livermore. The ups and downs, the panics, the markets, and everything all around it, and how he was able to make a fortune out of trading these same markets that you're trading. But unfortunately, back then I don't think trading psychology was a big thing. He ended up taking his own life. Jesse Livermore's story is not a victory lap. It's a reminder that success without discipline is just but temporary. All these people you see online, all these people you see flaunting, all these people you see happy and excited whenever they just get one big trade and say, I made over 10 million Kenya shillings, dollars, bit. I've seen, there's a trader, and I've told you guys this before in a previous video. This trader we used to follow every single day. He had made money from $2,300 and grew it all the way to $30 million in modern day. And this year alone, on one trade, he lost $27 million on one trade after a clean 5 to 6 year track record of consistent trading, proper risk management, all gone in one single day, one single trade. Actually, it was November last year, just before the elections, the US elections. So that mastering the market means nothing if you do not master yourself, my people. Take time with yourself. Markets is not all about trading. Learn yourself, learn who you are, learn if you're patient, if you're impatient, learn about yourself, because you are the one who has control of the wheel, control of the car. You are the front seat. The markets are just the highway. Now it depends on how you start. You can go off the road, you can stay on the road. You can see a red light and not brake and go straight ahead, get an accident. You are the one in control. So you're the most important, vital person in any trading system. It is you. Without you, a trade is not taken. So, a man, and this is a very important quote that Jesse Livermore says, a man must believe in himself and his judgment if he expects to make a living at this game. So if you're listening to this Visionaries Unplugged episode, believe in yourself. Take that trade you are afraid to take, because honestly, I know most of you have failed to take some trades because you are fearful, but it was part of the plan. But something inside you is telling you don't take that trade. And there are other trades you took and risked too big that were not part of the plan, and you lost or even blew your account, your prop firm, or your own personal trading account, maybe even a demo account. So a man must believe in himself and his judgment if he expects to make a living at this game. I'll read a few quotes of my notes that I have. That was just basically the story I was just taking you through, from how he started to how he ended. And I'll give you a bit of some quotes that I took away from this book, and some I've already read, but I'll give you the ones that I've not yet mentioned. A stock operator, which is basically a trader, has to fight a lot of expensive enemies within himself before he becomes a successful trader. So if you're going through it, if you're in the pits right now, if you're struggling in your trading, there's nothing new under the sun. Every trader goes through this. If you're sitting online trying to watch those guys online who are flaunting money, wondering why you're not making money, shut that off. Stop following those people. Work on yourself. You don't know if those people are showing the real stuff. Now, this is social media. You don't know if they're faking it. Trust in yourself. Close your laptop, not your laptop, close your social media account. Focus on yourself. read Jesse Livermore's book in the next 1 month. Just focus and promise yourself to read this book and finish it. And trust me, you're going to change. I must always back my opinions with the money. My losses have taught me that I must not begin to advance until I am sure that I shall not have to retreat. Oh, guys, that sounds like some Art of War Sun Tzu quote, straight out of the war days. Okay. Another quote: I hoped to win instead of knowing that I ought to win in form. Whenever you hope to win, you will not win. You have to ought to win in form. Have a strategy, have a plan, trade that plan, expect to win. The game taught me the game, and it didn't spare the rod while teaching. If a stock doesn't act right, don't touch it. Because being unable to tell precisely what is going wrong, you cannot tell which way is going to go. No diagnosis, no prognosis. No prognosis, no profit. Another two more quotes. I always found it profitable to study my mistakes. Always study your mistakes. You will learn more from your own trading than you will from any other book, any other trader, any other video that you're going to watch online. For years, and we keep laughing about this quote, and it's good. I can end this with this quote. Actually, we normally laugh with Ken about this every time. Whenever we do something wrong, whenever we see someone doing something wrong, we always quote this quote. And he says, for years, I had been a victim of unfortunate combination of inexperience, youth, and insufficient capital. And that's what most of you are going through. Inexperience. You're young and excited about this market, and you lack a sufficient capital. Those are one of the main things that are making you not become successful in trading. And you can't beat it. You can't skip youth. You can't skip inexperience and insufficient capital. You have to go through that process. And that's why I've seen a lot of people go through the direction of trading $100 account, then they buy $100,000 prop firm account just to start losing all of it because they're looking for that quick money. Okay? So yes, so that's basically the story of Jesse Livermore. And someone that I wanted to mention out of this story, and I have him here, was Mr. Partridge. If you read that book, one of my favorite characters was Mr. Partridge, who was a floor trader, and he used to make a lot of money. He really fascinated Jesse Livermore. Why? Because he used to make a lot of profits. And what did he always used to say? It's a bull market. So Jesse Livermore sometimes will come and say, I'm shorting, I'm shorting, I'm short. Jesse Livermore, Mr. Partridge would just sit in his desk, not moving much. Like now, this is the inexperience of youth is what Jesse Livermore is suffering from. Always trying to trade. But this guy will always sit tight and say, it's a bull market. It's a bull market. And just buy. When he sees people selling, buy. So it's important to follow the trend. And this is with respect to trading in the stock markets and commodities, not necessarily the currencies. I've talked about this in a different video, so you can check it out. Currencies have that fluctuation because they're looking for equilibrium. But stock market and commodities are value-oriented markets. They tend to be in a bullish trend more often than they are in a bearish trend. Or basically in a bearish trend is just what we call the main correction, and then the bull trend or the main market tends to continue. Another thing he says, one last thing, he says tips. I think I'll end with this actually. Tips and signals. And this has always been since back then, and that's why Jesse Livermore, imagine if he said that back then, that there's nothing new under the sun, and we're still quoting him to today in 2025, then there's a lot to learn from this. And I want to share this as I end because it's what most of you are normally going for. You're always looking for signal. Caleb, are you buying? Can you trade for me? Copy trading, all that. Look, listen. If you want to become a good trader, listen to this. Tips. How people want tips. They crave not only to get them, but also to give them. There is greed involved and vanity. And the tip giver need not hesitate about the quality, for the tip seeker is not really after good tips, but after any tip. If it makes good, fine. If it doesn't, better luck next time. If I told the average man, sell your 5,000 shares of steel, he will do it on the spot. But if I tell him I am bearish on the entire market and give him my reasons in detail, he finds trouble in listening, and after I'm done talking, he will glare at me for wasting his time expressing my views on general conditions instead of giving him a direct and specific tip. Okay, guys? So I can quote this guy forever. This guy, if you read his book and if you've been trading, it's just going to spark some stuff inside your head, because he just says what most traders are going through, what you are going through. So stop looking for those tips, stop doing those things. Just sit down, focus, learn, and trade. Learn trading. If someone can teach you how to trade, learn that. But stop following for tips. Teach a man how to fish, not how they can copy paste a fish. Okay, because it will not happen in the long term, especially if that person dies and all that, God forbid. It cannot happen. But anyway, guys, that's the story I had for you guys today. And there's so much more. I can keep scrolling and scrolling about this and how I can go on forever and ever and record his quotes and his stories, but it's only important. My work here was to spike that interest in the book and for you to go read that book for yourself. Yeah, it won't take you long. It's so exciting, it's so fun to read. It's English is back then, that type of English, but trust me, my guys, you're going to enjoy that book more than you enjoy trading the Forex or commodities or stock market, because we already know trading in this market has its ups and downs. It's not always about laughter. It's some tears, excitement, euphoric here and there. So that's it for today's episode on Visionaries Unplugged. And I hope you enjoyed this. If you enjoyed this, comment below, like, share, subscribe, and let me know which books you'd like me to cover. I'll start by sharing most of the books that I've read, that have excited me, that have shaped my life and my trading career, and how it can also impact yours. For you to take that interest in that book, listen to my summary of the book, and maybe even go ahead and buy that book for yourself and go through it deeply and understand it. So, but until next time, visionaries, stay woke, stay financially literate, and I'll see you in the next one. Peace.